The dollar. Looks like they're dumping it.
The world's largest oil producer, Saudi Arabia, is reportedly asking to join BRICS.
As more and more developing nations, including some of the world's largest economies, decide to ditch the dollar in their bilateral trade, voices of concern and even despair are being heard in the US over the looming end of America's global financial dominance.
In recent years, many people have been asking, will the US dollar collapse? Some experts predict that 2025 could be the year it finally happens. But why? The strength of the dollar depends on factors like trust in the US government, the country's debt, and its role in global trade. With rising inflation, increasing debt, and competition from other currencies, the dollar faces real challenges. In this video, we'll explore the reasons behind these warnings and why 2025 might be a critical year for the US dollar. So make sure you subscribe to our channel and press the bell icon so you don't miss any of our latest updates. Let's get started. The erosion of US dollar dominance. The US dollar has enjoyed a position of unparalleled dominance in the global economy for decades. It accounts for about 59% of global foreign exchange reserves as of 2023, down from a peak of 71% in 2001. This decline, though gradual, is indicative of a shifting global landscape where the dollar's role is increasingly being questioned. Countries like China and Russia have been at the forefront of this shift, advocating for a more multipolar world where no single currency holds undue influence. China, the world's second-largest economy, has been particularly vocal in its efforts to reduce reliance on the US dollar. Through initiatives like the Belt and Road Initiative, BRI, and the establishment of the Asian Infrastructure Investment Bank, AIIB, China is promoting the use of its currency, the yuan, in international transactions. Additionally, the launch of the digital yuan, a central bank digital currency, is seen as a strategic move to challenge the dollar's dominance in global trade. Russia, on the other hand, has been reducing its dollar reserves in response to sanctions imposed by the United States and its allies. The country has been diversifying its foreign reserves by increasing its holdings of gold and euros, while also promoting the use of alternative currencies in trade with its partners. The partnership between China and Russia, particularly in the energy sector, has further strengthened their resolve to move away from the dollar. The impact of US debt on the dollar's stability. One of the most significant threats to the stability of the US dollar is the growing national debt. As of 2024, the United States national debt stands at over $33 trillion, representing more than 120% of the country's gross domestic product, better known as GDP. This level of debt is unsustainable in the long term, and the U.S. government's continued borrowing to finance its spending is putting immense pressure on the dollar. The Federal Reserve, in an attempt to stimulate the economy, has been pumping money into the financial system through quantitative easing (QE) and maintaining low interest rates. While these measures have provided short-term relief, they have also contributed to a ballooning money supply and rising inflation. As of mid-2024, inflation in the U.S. is hovering around 6%, well above the Federal Reserve's target of 2%. This high inflation erodes the purchasing power of the dollar and undermines confidence in the currency. Moreover, the U.S. government's repeated raising of the debt ceiling to avoid default has raised concerns about the long-term sustainability of the dollar. Economist Nassim Nicholas Taleb has warned that the continuous increase in the debt limit could lead to a debt spiral, where the cost of servicing the debt becomes so high that it triggers a collapse of the currency. The scenario where foreign creditors lose faith in the dollar and begin dumping it could lead to a sudden and catastrophic devaluation. The geopolitical shift away from the dollar. Geopolitical factors are also playing a crucial role in the potential decline of the US dollar. The US has traditionally used its currency as a tool of foreign policy, imposing sanctions and restricting access to the dollar-denominated financial system to exert pressure on other nations.
We continue to ensure that Putin pays the price for his aggression abroad and repression at home.
However, this strategy has backfired in recent years as countries targeted by these measures have sought to develop alternatives to the dollar. The conflict in Ukraine and the subsequent sanctions on Russia have accelerated the move away from the dollar. Russia has responded by deepening its ties with China and other non-Western nations, promoting the use of their currencies in trade. The creation of BRICS, Brazil, Russia, India, China, and South Africa, reserve currency has also been proposed as an alternative to the dollar, further weakening its global standing. In the Middle East, a region where the U.S. has traditionally held significant influence, there are signs of a changing tide as well. Saudi Arabia, long considered a close ally of the United States and a key player in maintaining the petrodollar system, has been diversifying its economic partnerships. This diversification includes deepening ties with China, a move that reflects a broader shift in global economic power. The possibility of Saudi Arabia pricing its oil in yuan instead of dollars is a development that could have profound implications for the global financial system. The petrodollar system, in which oil is priced and traded in US dollars, has been a cornerstone of the dollar's dominance in global trade for decades. A shift away from this system would not only weaken the dollar's influence but could also signal a broader move by other nations to seek alternatives to the dollar in international trade. The role of interest rates in the dollar's future. Interest rates play a crucial role in the value of a currency. In the US, the Federal Reserve's interest rate policy has been a double-edged sword. On one hand, higher interest rates are necessary to combat inflation and attract foreign investment. On the other hand, they increase the cost of servicing the national debt, which could lead to a fiscal crisis. In 2024, the Federal Reserve has been caught in a difficult position. After raising interest rates to combat inflation, it has found itself unable to cut rates significantly due to persistent price pressures. This has led to higher borrowing costs for the government, businesses, and consumers, slowing economic growth and raising the risk of a recession. If the Fed continues to raise rates to control inflation, it could trigger a debt crisis as the government struggles to pay the interest on its massive debt. Furthermore, higher interest rates could lead to a stronger dollar in the short term, but this strength may be fleeting. A strong dollar can harm U.S. exporters by making their goods more expensive abroad, leading to trade imbalances. Additionally, it can create financial stress for emerging markets that have borrowed in dollars as they face higher repayment costs. These factors could ultimately lead to a global sell-off of the dollar, exacerbating its decline. The rise of alternative currencies and digital assets. The rise of alternative currencies and digital assets is another factor contributing to the potential collapse of the US dollar. Cryptocurrencies like Bitcoin and Ethereum, as well as central bank digital currencies, CBDCs, are gaining traction as viable alternatives to traditional fiat currencies. These digital assets offer benefits such as lower transaction costs, increased transparency, and resistance to inflation, making them attractive to investors and countries seeking to reduce their reliance on the dollar. China's digital yuan is the most prominent example of a CBDC challenging the dollar's dominance. The Chinese government has been actively promoting the use of the digital yuan in domestic and international transactions, aiming to reduce the country's dependence on the dollar. If successful, the digital yuan could become a major player in global finance, further eroding the dollar's influence. Cryptocurrencies, though still relatively volatile, have also emerged as a potential threat to the dollar. As more people and institutions adopt cryptocurrencies for transactions and as a store of value, the demand for the dollar could decline. This shift could be accelerated if governments and central banks around the world begin to adopt digital currencies as part of their monetary policy frameworks. The potential consequences of a dollar collapse. The collapse of the US dollar would have profound and far-reaching consequences for the global economy, sending shockwaves through every corner of the financial world. As the world's primary reserve currency, the US dollar is deeply woven into the fabric of international trade, finance, and investment. It's the backbone upon which much of the global economic system is built. A sudden and severe devaluation of the dollar would unleash a wave of financial instability, causing significant harm to countries, businesses, and individuals who hold dollar-denominated assets. These assets, which once seemed safe and stable, would rapidly lose their value, leading to widespread economic turmoil. This devaluation could erode confidence in financial markets as the value of these assets plummets, leaving investors and governments scrambling to contain the fallout. Within the United States, the collapse of the dollar would likely trigger a severe and deep economic crisis that could ripple across various sectors of society. Inflation would surge uncontrollably as the cost of imports, everything from essential goods to luxury items, would skyrocket. This inflationary pressure would erode the purchasing power of ordinary Americans, leading to a sharp decline in the standard of living. Families would find it increasingly difficult to afford necessities, while the cost of living would rise dramatically. On a global scale, the collapse of the dollar would have equally devastating effects, disrupting trade and investment flows that have long been the lifeblood of economic growth. The interconnected nature of the global economy means that a collapse in the dollar's value would lead to a sharp contraction in economic activity across multiple regions. Emerging markets, which have significant exposure to the dollar through debt and trade, would be particularly vulnerable to this disruption. That's all for today's video. I hope you liked the video. Subscribe and hit the bell icon for more updates. Thanks for watching.